Tom White of TD Ameritrade joins us now. He's watching Home Depot. No doubt this could be a mover, especially on the Harvey and Irma hurricane situations. People are really stocking up here.
Yeah, I think it's going to be broad-based as far as timing, because it's going to last a few months as they rebuild, and then we don't even know what's going to go on with Irma, where it's going to hit, how bad it's going to be. So it's propelling Home Depot shares this week, and that should be expected. The stock's up over 370% in the last 6 years, though, Angie.
That is an impressive move.
As a trader, that kind of scares me a little bit. And we talked about this a few weeks ago about getting Amazon, whether it was Lowe's or Home Depot. They've got the boost from the hurricanes and the rebuild that's going to take place. But eventually, Amazon's going to start wearing down their big box business. That's hard to say. But we should see some sustained growth in the shares of Home Depot, up to about $158, $159 a share. We've seen some resistance there, but right now it's firing on all cylinders, and we should see a pickup in sales this quarter.
Oh yes, and it's so tragic to watch what's happening to the people in harm's way, but I'm so impressed with the way people have just stood up to the storm.
Yeah, reaching out everywhere, yeah.
Let's move on to JPMorgan. We haven't taken a look at a financial stock in quite a while.
Right.
It's been off the radar.
Well, I think these financial stocks deserve to be off the radar a little bit because interest rates are going lower. And they're asset holding big banks, whether it's Citigroup, Wells Fargo, and JPMorgan. They've got a lot of assets on their sheets, but with interest rates falling, that's not helping these banks. And that's part of the reason that JPMorgan just recently broke a trend to the downside, printed under $90 a share yesterday. And we might see that continue. The Fed's going to continue to be dovish, especially in the wake of mixed economic data, the impact from the hurricanes. So unless those interest rates start jumping up, you're going to see banks probably consolidate, stay in a tighter range, and wait for that first pump up in the 10-year interest rate. And that's when we'll see the banks kind of carry through. I like JPMorgan down around that $87, $88 share level if it gets there. But anything around that $90 share level is probably a buy in the long term. Let's
take a look at Kohls. How's this retailer doing?
Kohls. It's been Amazoned over the last few years, as the whole retail sector has. It's down 18% this year alone. They're going to start opening Amazon centers in some of their stores. And what that means is people are going to be able to interact with their products, whether it's the Echo, the Dot, Fire TV, and their tablets.
Hey, if you can't beat them, join them, right?
Exactly, and I think this is a really big move for Kohls in that space, as they're
smart.
Instead of fighting them, they're going to join forces with them a little bit, and it's going to improve foot traffic. And going into the holiday season, that's really going to pump up some of their sales.
Do you like the stock?
I do like the stock. It traded down around that $40 share level early in the week, and we're seeing a jump on that news that they're going to put those fulfillment centers within their stores. And I think that's going to really propel the shares probably up to that $44, $45 share level over the next few months, at least through Christmas.
Well, thank you so much for being on the show today.
Great to be here.
I love having you on the show. Thanks, Tom.
You got it.